Welcome to everybody that's logged in. I'm going to give it another 30 seconds or so to make sure we can get everybody logged in. Thanks so much. All right, let's go ahead and get started. Thank you again for joining us today. This is our webinar to discuss the COVID-19 impact on the mobile secondary market. My name is Melissa Geringer. I oversee communications for bstock and will be serving as moderator for today's discussion. As we get into the webinar, please feel free to use the portal on your screen to send in questions via the Q&A tab on your toolbar. We'll plan to do a Q&A at the end of the presentation. We're also going to be doing 2 polls within the webinar to help drive the conversation, so thanks in advance for your participation in that. The polls are going to pop up on your screen and they'll be completely anonymous. So with that, I'd like to welcome our host, Joe Doobie. Joe works with some of our largest mobile buyers and sellers, providing them data and insights in order to optimize the experience across our network of mobile marketplaces. And with that, I'll go ahead and hand it off to you, Joe.
Thank you very much, Melissa. I'm happy to be here today on it's now 8 a.m. here on the East Coast in the U.S. So bstock, we have a presence in the UK, and we have 4 offices here in the United States, but we're obviously all at home the past several weeks. So I hope everyone on the webinar is safe and sound in their homes as well. So excited to dive into some of the data that we've seen over the past several weeks in the mobile secondary market. And I will move over to our first slide here and just talk a little bit about the current landscape that we're facing. We'll then get into what that mobile secondary market reaction has been, and then share some data with you from across our network. So to really understand the audience and who's on the call today, I'd love to just queue up that first poll, Melissa, so we can get a sense of who's joining us today. So if we could fire up poll number 1, that would be great. And you should see it there on your screen. So what I'd love to understand is how you've worked with bstock in the past. Have you purchased inventory from bstock Supply or one of our private marketplaces? Have you sold inventory through bstock Supply or a private marketplace, or have you not yet worked with bstock? And thanks to everyone for getting those answers in. Looks like almost everyone has voted at this point. A couple more coming in. So as these are being filled out, I think it's important to note why we have such a unique perspective on the data here. And it looks like, which is exciting, I can share these results. It looks like a lot of the people on the call today have not yet purchased or sold through bstock. So welcome aboard. I'm glad you're here listening, and I hope we can sort of point you in the right direction if you are looking for inventory in the mobile space. So as I was saying, bstock, we're in a unique position because we run marketplaces for the largest carriers here in the United States, both AT&T and T-Mobile. We run marketplaces for some of the carriers in Canada. We have marketplaces directly for some of the manufacturers like Samsung, and we're working directly with a lot of the largest retailers in the world. One of the largest ones that does mobile phone sales here in the US is GameStop. So let's talk about that current landscape. So clearly everything's closing down, right? We've seen store closures since the middle end of March, and more significantly over the past couple of weeks. Both all the carriers and Apple stores have closed. Since then, we've seen some come back online, but the foot traffic is so low that it's really negligible, right? There's not people out there shopping or going into stores. Another big piece of the current landscape is that reduced travel that impacts freight. So all those commercial flights that we're typically hopping on to travel throughout the country and the world, a lot of freight actually sits in the belly of those planes. So because of the reduced schedule of all of those flights, because no one's flying anymore, freight's a lot more difficult to move across the country and across the globe. We also see it stacking up in terminals. Some of the initial changes that the carriers like FedEx and UPS made, some of those higher value shipments that typically are requiring deliveries, they're trying to minimize that human contact, and some of that has been rolled back. And it depends sort of day to day and week to week here on what's happening within each specific country. Borders are closing, but we still see the goods moving across those country lines. So there are some exceptions here. I know the UAE has been shut down, and it's been difficult to get product in and out. But it's a situation we continue to monitor. And then we saw the Apple production rebounding, and we were surprised yesterday with the announcement of the second generation of the iPhone SE. So I was really unsure if that was going to happen while everyone was in quarantine and the Apple stores were closed, but they came out with the $399 price point on a iPhone SE, just like they announced in 2016. This is now the second SE that they've released. And this phone has the chip of an iPhone 11 Pro in a smaller body, and it brought back that Touch ID instead of using Face ID. So we can talk a little bit more about that and how that will impact the pricing on the secondary market later in the presentation. So what's been the reaction of this large macro pandemic by the secondary mobile market? A lot of volume fluctuation, clearly, and we're in a time where volume today is not nearly what it would be in a typical mid-April timeframe. The rules are sort of no more here. What we've seen is that that brought in some new buyer demand. When we knew that things were getting weird in late February, early March, buyers were very aware that they could be losing out on volume in the future. So I think there was a premium put on inventory and being able to buy in bulk. So a lot of buyers were activated and really competing in the late February, early March timeframe because they knew that they expected to see volumes come down over the next several weeks and months. So I think that there was a lot of competition there, and we saw prices actually increase in the short term for specific conditions and models. One of the things that we saw earlier, specifically when the virus was mostly isolated in China, was a pricing drop and rebound for grade D. So when the Hong Kong border closure was all happening towards the end of February, or actually, sorry, end of January, beginning of February, there was a lot of nervousness there, and a lot of the phones that are in poor condition that are typically shipped directly to Hong Kong, demand for those went way down. So we saw that, and then we saw it really rebound within a couple weeks. So that was really an anomaly that we witnessed, and we'll look at that data more specifically. And the last bullet point here on this slide is that atypical depreciation curve for grade A and B. And we'll take a look at what that means. So that Hong Kong border closure, here we have several different models, and this is all D grade inventory. So this is inventory that has smashed glass, really heavy wear, is not retail ready. This can't be sold directly to a consumer. It's going to require some refurbishment. And as you can see by this graph and that timeline at the bottom, right at the beginning of February, when this pandemic was not yet a pandemic, and we were dealing with the coronavirus sort of just as rumors and not sure what the impact was going to be, what we saw was those D grade devices really came down in price. What that did was it brought on new buyers that were looking for, I mean, basic economics here, right? As price comes down, demand is going to go up. Brought on some new buyers who perhaps had outlets in different geographies. And then that concern around the border closure sort of went away, and we saw that market correction happen. And the pricing within a month was sort of back where it was in January. So pretty interesting graphs here. We very rarely see this type of volatility in the secondary market. It's pretty well established in terms of what we can expect for depreciation each week, each month, for a specific model and grade. You know, we've been collecting this data for many years now, and you know, the first iPhone was released in 2007. So this is something where there's been many generations of phones that we now have the data to look back and understand where pricing should be. And these types of events that occur are very very interesting to me, because this is stuff we never typically witness. So I referenced this earlier too, and this is the AB grade pricing behavior. So this is product that is retail ready. It may have some minor scuffs or scratches, but it's a fully functional device in pretty good cosmetic condition. And what we saw here is, instead of that typical depreciation, which is in the dotted line over this graph, around that time in mid-February, we saw the pricing climb for this product, and it remained steady. So you can see it's very flat there in the back half of the graph. And what that's telling me is that it's people are paying more than they would for this A and B grade product. And that's because there's a scarcity out there, and they're anticipating that volume in the secondary market is continuing to decline. But end users still need new devices, whether that be because they broke or whatever it may be. There's still a demand there from the end consumer. So buyers in the secondary market are putting a premium on volume and paying more than they typically would for those retail ready devices. So this is a slide that has a lot of data on it. First, what I'd like to do is explain what these graphs are, how the data was pulled, and then we'll go into some specific examples of what I'm seeing here. So what you'll see is that there's A, B, C, D grade devices. So those are all the conditions for each of these iPhone models. They're anchored at 100%. So 100% represents the price that was the market price that we witnessed on that first week of January. So if we start with the iPhone 11 in the top left, that's obviously the most recent model of the current iPhone model, the iPhone 11. What we see is the yellow line there, the D grade, experienced exactly what we were just talking about. That D grade stuff came way down in late January, early February, and then recovered by early March, mid-March. The other points are interesting, right? It's showing that there was basically no depreciation for the iPhone 11 across A, B, and C grade from January all the way through mid-March. So see how those, the gray, orange, and blue lines were very flat at 100%. And then at the end of March, they started to come down, and they're now sort of where at 90% of what they were selling for in the beginning of January. And I think a lot of that has to do with when the US was impacted most greatly. So within the past 2-3 weeks, that's when we've seen most of the country here take this pandemic more seriously and enact those shelter-in-place orders and really shut down retail. And I think a lot of these devices that are newer, are in higher grades, are more valuable, we're more likely to stay domestic within the United States. So earlier on in the year, they were less impacted by the global COVID crisis. The D clearly was. You can see that yellow line dipping way down to 60% in January. But the rest of those phones had homes here in the United States, and it's not until the past couple weeks that price has started to come down. If we then compare that iPhone 11 in the top left with the iPhone 7, which is on the far right, the iPhone 7 has much more standard, is a much more standard depreciation. This is what I would expect. I mean, it bounces around a little bit. There's probably a little more volatility than would typically see because of COVID, but there's no big swings for a specific condition. Here we see it slowly going from 100% down towards mid 80s in the April timeframe. So that's because it's an older device. There's a lot less volatility in the price. It's 3 years old at this point, so it's just experiencing that more standard depreciation curve and is less impacted by these current events. One thing to point out on before we move on to the next couple slides, one thing to point out here on the iPhone XR and the 8 Plus, which are both on the bottom, is that increase in price that you see in that early February to mid-March timeframe. It's particularly pronounced in that iPhone XR. And I think, again, that's buyers putting a premium on volume, and if it was out there, they were competing and trying to capture that. So it's pretty rare to see prices in March or April above those of January, right? These are depreciating assets that only get less and less valuable over time. So any times that we see pricing go up, it's very curious and makes me dive in a little bit more. So this next slide talks about auction participation. So in addition to price and really paying attention to every ASP by grade, by model of where we see the market, I'm also very plugged into that participation in each auction. We want to make sure that there's healthy competition out there, that buyers are participating, and there's going to be a home for all this inventory. So on the left, what we're looking at is unique buyers. And this is each week how many different businesses have purchased from any one of our dozens of marketplaces. So what you see here is the number bounces around a bit after peaking in that early to mid-February mark, but the overall trend is downward into April here. So you can see we peaked around 2.3, 2.10, but then it's come down since then, and that lowest point was right at the end of March. And again, I think a lot of that is because now this coronavirus crisis has really caught up with the entire United States, and I think a lot of smaller buyers are probably no longer purchasing. So the next poll that we'll do in a minute here, we'll talk about how you are all being impacted, all of you that have joined the call today. So bidders per auction is another metric that I closely monitor, and this one is telling me how many, for each auction lot, how many businesses are competing for that. So if there was just an auction with one single bid, one winner, there would be one bidder per auction. The health of we want there to be a significant number of people competing. That's how we know that we've matched supply and demand across the network. And what we see, again, mirrors all of the data that we've been showing, is that those most competitive auctions were in early to mid-March, when the US still wasn't completely shut down, and competition was very strong, when people were putting a premium on volume. So before we wrap up, I'm going to take you through some of the key takeaways from Q1. These are metrics that we put together each quarter and we publish in a mobile summary by quarter. So we've been doing this over the past year or two. Melissa helps send that out. So please do, connect with us on LinkedIn, follow the bstock blog. We're putting out this type of data fairly regularly. And the value here, again, is that we have a unique perspective because so much volume moves through our network that we can really understand what's happening in the secondary market. So the first number that I see on the left is 2.5%. And what that's showing is the average monthly depreciation across top Apple and Samsung smartphones in Q1. So even though we've had some volatility, and it's been a time like no other, we actually saw when I zoom out a little bit, we actually saw fairly standard depreciation. So this is what I would expect per month in a non-event time period. Obviously, the biggest impact on an annual basis to the secondary market is typically the iPhone event, which happens in September. So that 2.5% monthly depreciation in a non-event time is very standard. And it was sort of helped by the D grade depreciated faster than we thought. The A and B was stronger than we thought, but it all sort of came out in the wash to a fairly standard rate. The next point here is the 12.3%. So what does that number represent? That's the average delta between ASPs of different condition grades for Apple devices. So for instance, from an A grade to a B grade, what's the price difference? On average, that difference is 12.3%. So what we saw here as compared with previous quarters is that number has actually grown a bit. And that makes sense because of all the volatility we've been looking at, that now in Q1, there's more of a gap between each of those condition grades for Apple products. On the far right, we see 23.4%. The average delta between ASPs across condition grades for Samsung devices is always larger than Apple. It's more expensive to repair these devices. The supply chain for parts and other accessories is not as robust as the Apple supply chain. So we typically see a larger gap in A, B, C, C, D for Samsung devices. And that 23.5% is right in line with previous quarters. So the last two notes here before we talk about our forward projections are just around the top sellers. So we found that the iPhone 8 Plus moved into that top seller slot along with the iPhone 8 and iPhone 10. And that's exactly where we expect them to be. Those are the 2-generation-old devices that typically dominate the secondary market. Those are the devices that everyone is trading in as they trade up to the latest generation. So here we are in 2020. Those are 2018 phones coming into the secondary market and leading the way in terms of volume. On the Samsung side, they did have their new Galaxy S release. It didn't go off with as much marketing and hype as they would have liked. It was supposed to be announced at Mobile World Congress, which in Barcelona, which we were planning to be at, and were bummed it was canceled. But looking back, it now seems like it was the right decision by the GSMA. So what we saw on the Galaxy side was the S10 Plus, the Note 9, and the S8 Active were the top 3 sellers across our network. And those are fueled, I think those are a little bit newer than the Apple side, especially the S10 Plus. And that's because we are seeing those trade-ins, early trade-ins for the latest Galaxy S device. And those are those early adopters that may be trading in every year. So before I dive into some projections, Melissa, could you cue up the second poll? I'd love to get a feel from the audience that's joined us today, how COVID-19 has impacted their business. So has there been no impact? Or are you seeing increases in sales? Has there been a decline of 25% or so, decline of 50%, more than 50%, or have you completely shut down? So we'll give everyone a minute to respond to the survey there. And a majority of the businesses I'm talking to here in the United States, those larger processors are functioning right around 50%. So the attendance has been down. Obviously, the volume overall is down, but and it looks like that's sort of splitting the decisions here. So if we share the results, looks like there's about a quarter of people had no impact or sales are increasing, so that's awesome. And then the leading a third of people have decline of up to 50%, which is in line with what I'm seeing, and a couple more have had a decline more than that or completely shut down. So we're hoping that we can all get through this together, and the end is closer than we hope. So we'll stop sharing that poll, and we'll get into some projections here before we open it up for Q&A. So the units on the secondary market, I'm expecting those to be around half of the typical volume. So when I looked at March, it was approximately 2/3 of January's volume. But in previous years, the volume in March was very similar to the volume in January. So I think it's going to come down even further here in April, towards the end of April, and be about half of the typical volume that we see flowing through the secondary market. No secret here, everyone's talking about this, but I think a shift to e-commerce is only going to be accelerated through the COVID-19 pandemic. I mean, as everyone continues to shop online, as retail storefronts are closed, I think a lot of that behavior will be here to stay. Obviously, it's been happening over the past 10, 20 years, but I think it will be, a more drastic shift. So if you do rely on a physical retail footprint, I mean, this is a great time to make sure you've got your eBay, Amazon, Swappa, back market stores up and running, and that you can still service your customers virtually. And the final bullet point here is sort of a wait and see. It was a bit of a surprise. I wasn't sure if Apple was going to do this release, given that all of their stores are closed. But they did yesterday announce that SE2, or they just call it the iPhone SE, which makes me angry because it's difficult for us to, the naming convention is the same as the previous model, so that's confusing. But that came out at $399, so it's a huge value proposition for the customer. Big difference from the iPhone 11 Pro, which starts at $1,000, and the Pro Max, which is up from there. Clearly a different customer, but I think by offering a $399 phone, especially in these times where there's unemployment is surging and there's a lot of people out of work and looking for a good deal and looking to stretch the dollar a bit further, I think this is going to be a very compelling offer. It's going to be available by order online by the end of April, so it'll be out there in the market quickly. It does bring back some things like Touch ID and a smaller screen, but it has a lot of the features that customers love, like the portrait mode photos are still there. And it has that iPhone 11 Pro chip. So it's the A13 chip in there for $399. So pretty compelling value. I see that impacting the secondary market, most specifically the 8 and 8 Plus, which are sort of that value device before the SE was released. So I'm anticipating over the next couple of weeks that those prices in the secondary market for 8 and 8 Plus really get hammered. So with that, we will open it up for Q&A. Melissa.
Yeah, thanks so much, Joe. I had a couple questions come in, and feel free to keep submitting if there's that Q&A tab on the toolbar there. So first question, what do you expect in terms of volume on the bstock marketplace when things do come back online?
Yeah, this is an interesting one that we're, as a team very much talking about each week and sort of trying to forecast out what that ramp up looks like. I think, like I said, we'll probably bottom out here at around 50% of traditional volume. I'm hoping that the floor is within these next couple of weeks. No way really to tell at this point, but that's what we're projecting. But I do anticipate, if we're able to open things back up, that volume, there will be a sort of catch up period where volume will surge a bit as those built up returns come in. There's some, the supply chain opens up. There's not as much reason for sellers to hold on to any sort of safety stock, or just they'll feel better about truly liquidating their phones and getting them out into the secondary market. So I think what we'll see is the continued decline over the next couple of weeks, and then some pent up demand will find its way into the secondary market, and will hopefully be back up and running by the fall in that next iPhone event.
Super. And that actually leads nicely into the next question, which is, do you see buyer demand shifting to different geographic regions post-pandemic?
Yeah, I think what this has done is, and what bstock does is, we're a marketplace that has global sellers and buyers. So the winners of these auctions are going to go to who's willing to pay the most, and who's willing to pay the most is those who have the best sales channels downstream from there. So I think it's really an even playing field across the globe of who has access to this inventory. And I think, yeah, I mean, a lot of this stuff that maybe was staying domestic, this higher grade, newer phones, I see it finding its way into Europe, into the Middle East. This is stuff that traditionally stayed domestic, but I think that there's a lot of international buyers that are able to find a home for this stuff at a higher price. And yeah, I mean, I think it just sort of makes everyone take a step back and understand what they can process, and maybe sort of try to find additional sales channels for different types of different models in terms of age and condition.
Great. And had one last question come in here. So I'm new to bstock. Where do the majority of the phones you're selling come from? Who's selling them?
Yeah, good question. So I referenced this earlier in the presentation, but we run private marketplaces for really large organizations. So if you go to bstock.com and click on the marketplaces page, you can see who the seller is. A lot of those mobile marketplaces, they run under a generic brand name. So for instance, if you looked and clicked on Superior Wireless Auctions, you'd see in the terms and conditions that inventory is from T-Mobile. So T-Mobile is now, that they just merged with Sprint, they're now the largest carrier in the United States. So I would reference you to the bstock homepage, click on those marketplaces and see who those sellers are, but they are the largest carriers here in the United States. They are the largest retailers here, and the manufacturers. So and there's some large wholesalers and processors in there as well. So I would take a look at our marketplaces page and let our customer service team know if there are any questions. But yeah, we don't touch the inventory at all. We're simply a marketplace connecting buyers and sellers, but the sellers on our marketplace are very large businesses, mostly based in the US, with a handful out of the EU.
Sure, thank you. All right, well, I think that will wrap it up for us. If you do have any extra or additional questions, feel free to, you can email me. I actually was the point of contact on the webinar invite, so feel free to send me an email. If you have any general questions, you can also always reach out to our customer support team, cs@bstock.com. We really appreciate you taking the time to tune in today. We're going to be sending out a follow-up note to everyone with the presentation included either later today or tomorrow. So again, thank you so much. Hope everyone is staying well and healthy, and take good care.
Thanks for joining, everyone.